Should you be concerned about investing and trading into 2025? With the possible head and shoulders pattern, one of the weakest Santa Claus rallies we've ever seen, and 4 days down into the end of the year, what exactly is going on? In today's video, we take a look at the dark pool liquidity, the unusual flows, and what the bonds market is starting to say that's a little bit worrying. With the Dow Jones being one of the weakest in record for the month of December, Bitcoin looking like it could have a head and shoulders pattern on it, and a lot of other things going on. What is going on? Guys, join us as we cover stocks, commodities, and cryptos into the new year. Let's get into it. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss because, of course, we saw 4 days down. We've got some unusual flows, and more importantly, we have some whales starting to enter into certain markets. Guys, Happy New Year, but let's get into it straight away when it comes to what's going on with stocks and commodities and cryptos. First up, we'll talk about the Trinity. You guys know we like Santa Claus rallies. Why? Not even about the Santa Claus rally. It's about the stats that come with the Holy Trinity. Yes, we want to see Santa Claus rallies, we want to see the toy indicator from Wayne Whaley, and obviously positive overall Januaries. If we do get those three, yeah, it looks like we're going to be in a good year. But these are kind of troubling times. Why? Because it looks like Santa may have skipped this election year. The last time that happened was 2004, and as we posted over on X, links in the description down below, that tended out to be not a great year. In fact, the market only gained 3%, and it did also come with a couple of other interesting stats that we'll look at in a moment. Now, why is Santa Claus rally so important? Well, when we get it, we tend to have double-digit years. When we don't get it, we tend to have single-digit years. And a lot of those single-digit years can also come with big sell-offs. But the good news about seeing 3 or 4 consecutive days down into the end of the year, which is obviously what we did see, is that the stats are incredibly good, although limited in terms of the data that we have, into the next start of time. That means the next week, 2 week, 3 week, and 1 month returns in the limited data set we have here were all significantly positive. I mean, not only were they 100%, but they were also pretty nice January returns on average. Now, will this happen again into 2025? Well, even Wayne Whaley's studies, which are excellent studies, have shown us that if we have a negative end to the week, that is the last week of the year, that 15 times out of the last 20 years, we've seen overall bullishness, and only 5 times have we seen down. So when you kind of bring together those two stats, you've got a pretty nice kind of correlation. Now, we also have a very important level, and as you'll see in the options flow, it's incredibly important that we see this level defended. Now, Santa Claus rallies, Januaries and Q1s, we know that we see at least a Santa Claus rally, we tend to bring this year, January being positive, we tend to even include great years. This is the 2004 read we mentioned before, leading into 2005, and we saw negative 1.8, negative 2.5, negative 2.6 for the first quarter, and only 3% for the year. So again, you can look here at the stats. When you tend to have kind of bad starts, it doesn't usually bode well for the rest of it. Now, why could that be? Well, most people are going to know by now that, yeah, we're getting into some high equity valuations. If you're a longer term investor, you're probably looking at this number thinking, whoa, do I really want to be in the cap weighted market right now? 36.5 in terms of overall forward PE, and of course, a concentration of the top 8 bordering on 36% of the entirety of the S&P market. We've never seen concentration quite like this, and that means that if anything goes wrong in those top 8 stocks, things could go really, really bad. Some other stats here, November into January, obviously we see positivity across those months. Again, 12-month ratios tend to be good. We use this in, of course, 2024 as well. Based on 23, it was a great time. And remember, the last time we saw this really go bad was 21 into 22, and that turned out to be not a very good year. So there is a lot kind of going on what these data points do end up showing us. Some other things that you may be aware of, we've been talking about it for a little while, is that we kind of see Wall Street trying to hold semiconductors up right now. Now, everyone can see this chart here looks like a head and shoulders. Everyone can see that clearly software has been improving in recent months and then started to decline over the month of December. And that is coupled with an uptick in semiconductors. So will we see this happen again? Remember, it's been down for software, up for semis, up for software, down for semis. So we're kind of seeing these kind of intertwined together. So if we see further breakouts in semis, we can kind of guess that that may be the next big move for the markets. Now, why could we get another decent move? Well, one reason has to do with actually people shorting the stock markets. Now, we just heard everyone was going bullish, but as it turns out, people are significantly trying to short now. Look at that short spike that happened over December, and we can kind of assume that's even higher right now at the time of this recording. We haven't seen reads like this since 2018. It's over 5% up, plus probably another 5% post that into shorts that are exposed. And this could end up being a squeeze. So again, if we see price action move towards the upside and you're wondering why things could go ballistic, well, a lot of it's got to do with the amount of shorts that are now suddenly appearing in the markets over the last couple of weeks. What do you think is going to happen to the sentiment reports, though? We've seen a lot of retail traders turn bearish. A lot of you are probably turning bearish here on the markets. Will that continue through to the sentiment report this week? We will be sharing it on our special weekend video. And guys, I think it's going to be a bit of a blockbuster if that is super bearish, which it certainly could be. Putting 2024 into perspective. So we know that 2024 was an exceptional year. Hopefully you had a pretty good year overall. Obviously, you may not like December as much as you liked up until that point, but the average generally is worse in terms of most pullbacks. And we only saw 8.5 kind of this year, and that means that we're due for a 10% pullback. If I was to guess, and sometimes we do like to have a little bit of a guess into years, I would guess that this year we'll have a 10% pullback in it. And the reason is because we're due one. 421 days, you can see here that we're starting to get up there on the overall averages. And while we've overshot that by quite a lot, the statistics are in your favor to bet on a 10% pullback at some point during 2025. Now, will that mean that there's a recession though? Well, let's take a look at those stats. First up, we know that generally first year election kind of years have been not too bad in recent times. Historically, though, Republican ones have been really bad. We've already shown you the stat that generally says first half could be good, first quarter sometimes is bad. So if you're going to go with the stats, the first quarter is where we're going to see some weirdness. Then the second quarter is going to be positive. Then you would go with the second half being negative if you were guessing based on the statistics themselves. If you were to argue whether we're going into a recession or not, though, during 2025, right now, up until at least October of 2025, you would have to say no, not until that point. Now, why is that? Because when we see over 35% gains in the rolling 12 months without having another one before it, we have never, ever, and we've got quite a lot of reads here, we've never seen a recession in that next 12-month period. So this is taken as of October. We also know that markets should theoretically be holding themselves up over the next month. Now, why is that? Well, because we saw a flash sell the other day that we don't usually see. RSI crossed below 20 in December. We saw a very quick flash sell. Generally, we will end up seeing markets actually pick that up. Now, we'll look at the dark pools in a moment together, but let's just quickly go to crypto because these markets are all interconnected. So we know that Bitcoin post-election days has had positive correlations with it. We already have seen that. And of course, we already called this in October, saying that we think that there's going to be incredible positivity into the Bitcoin market. But now, are we ready for altcoin season? When everyone's freaking out and saying everything's all over, are we actually just seeing the beginnings of rotation into things such as Ethereum and other stuff? Now, of course, I've been going on about Ethereum for at least 3 weeks now, and maybe even 4 weeks. I've been talking about how I think it's going to be stronger than Bitcoin moving forward and that we're a little bit ahead of the time. Well, as it turns out, 1,050 days is about right for Bitcoin dominance, and then we usually see Bitcoin dominance drop off as the altcoins come through. Remember, we've shared many charts. January into May tends to be positive for Ethereum. Now, let's have a look here. Overall, Bitcoin flows were down over the last 7 days, and Bitcoin and Ethereum flows were actually up over the last 7 days. So people have been buying a little bit more ETH than they've been buying Bitcoin, and that's going to show up in a dark pool in a moment. Let's go back to the stock market, though. The stock market, we know, was defended by huge transactions based on the OPEX, which seems like an eon ago, but it was actually only a few weeks ago. And then, of course, more transactions. Now, from that point, we dropped, then we rallied back up. And that meant that we were probably defending the zone. So where are we right now at the time of this recording? Are we in the defended area? Well, the answer is quite simply yes. These are where the large transactions came through. Where's the current price action at? Right here. So is it time to panic? Probably not. Is it time to say we want to see the market be defended here? The answer is quite simply yes. We do not want this level broken too far downwards because, as you'll find out in a moment, that could mean we're going to 36 and that could mean that we're going for a gap fill. Let's have a look at silver. Silver getting a large transaction on it. Not quite time for us to enter into silver markets, but obviously an interesting level nonetheless. So silver trusts getting big trades. We've got Bitcoin trusts getting some large movements here, the sixth largest trade since inception. And you'll notice that this has been where all of the largest transactions have come through. These led on to a little bit more of a rally. Are they all sells? Are they buys? Let us know what you think in the comments down below. If we give up this range here, of course, that will activate the potential of a head and shoulders, and we could move on down. So that would be a little bit unfortunate if that was to occur. Let's now jump on over to energy sector. So what's going on in the energy sector? Well, some large trades. Last time we saw a big trade, we saw sell-off. Then we've seen three, a cluster of trades followed by a little bit of positive action. And we've already been talking about oil on the improve. Turns out that's been kind of correct and it's still moving up. A few of you guys messaging me saying, yes, I'm on the oil. It's working. That was certainly counter logic to what a lot of people were thinking. But yeah, the price action doesn't lie and some big trades have come through on energy. So is it time now for the energy sector? I'll let you be the judge of that one. Let's take a look at Barber. Large trade coming through. Again, this was previously seen before a huge rally a few weeks later on the stock. We already know that the HSI, that is the Hong Kong market, starting to look better. And then, of course, we've got AMD from our previous video. Just wanted to put this in there. Still holding around this area, but still a big trade nonetheless. Let's talk flows. So if you go over the last month, it looks bad for some areas. Home builders, horrible. Materials, horrible. Certainly a worrying sign. Even regional banks, well down. But notice that we've got consumer discretionary and semis actually positive on the 1 month flow. And that's a big deal. So Black Friday was bumper sales. We can assume Christmas is bumper sales. Why? Credit card spend. Really, people are just buying things on credit cards. We're seeing credit cards go up and up and up in terms of people's debt carrying of debt. And this is always a decent sign for the economy. You may say, well, that's terrible. It is, but it's terrible long term, good short term. It's when it starts to decline that you need to be really worried. That usually shows people getting fired. So remember, if credit cards going up, initially it's all good. When you see it decline, ooh, that's bad. Because that means that people are probably tapping their credit cards out and they've already been fired for a while and they may not even be showing up on those fake jobs numbers that we see every month. Let's move over to energy sector. That has been the best of the last 24 hours. And we saw semis down. If we go to the 5-day kind of return, you'll see semis have actually dropped a little bit over this period and consumer discretionary. But energy's been the best sector overall. Not really a defensive market though, because usually you'd see things like utilities, healthcare, and staples holding up even better. They'd be even positive. So I wouldn't say market turned fully defensive or anything like that. So this will be the head and shoulders everyone's talking about. Left shoulder, head, right shoulder. Every technical analyst in the world can see this one. You guys can see it. We can all see it. Should we be worried about it? Well, it really comes down to how do we close underneath it? How do we move underneath it if we do? And remember, patience and reaction and not predicting is going to be the key. So if you've been buying around this area, where are you right now? The same area. So remember, buying the key zones and timing will be everything. I'm not necessarily concerned with this, but I did actually map out what I call a price prediction, which is based on a head and shoulders, and it came out perfect to pretty much marking the gap fill. So you cannot have 5,600 not on your charts. You cannot say that isn't a possibility. At this stage, we're going to say this is mainly defended. You can see also it's a gap down with a 2-day hold. If this ends up gapping up strongly into the new year, then again, what would that be? Little island reversal on the right-hand side. If that then gets through here, short squeeze. That's where you're going to get the squeeze. So the squeeze is going to be above that right shoulder here because that's where so many stops are going to be. We know a lot of people are trying to short. We've seen it with short interest openings. Let's have a look at the good signs. The good sign first, number one, is that we're holding the 20 weekly moving average. I love this moving average. We're still holding it. The bad sign is going to be that we've made a lower high potentially here. So of course, if we make a lower low, people see that as a sequence break. I would say the market probably is not totally destroyed until it really, contends with the 57, 56 level. If we look at the overall futures market trade, you'll notice here, I thought it was pretty nice the last 24 hours, but it still continues to make, the 24 hours before, because it was making a series of lower highs and lower lows, but we were defending this area. Now, we kind of didn't defend it properly. 2-hour 20, you can see, is also keeping it down. What I'm looking for here is to get through this area, this 59.25, and that to show day traders that they're really seeing that momentum come back in. You need this level to be defended. No more of these lower lows and lower highs kind of thing going on. Let's get a higher high in. Let's actually show that we mean business to defend the zone, and that is going to be a significant deal. What about the options flow? Well, things get weird here as well. 58.30, big put floor for the first day of trade, and then all of a sudden we move to 5900. And 5900 becomes the reoccurring put wall of kind of the next month. Take a look here at January. 5900 for the 17th. 5900, all sorts of puts everywhere. It's a put fiesta in February, puts everywhere. 6200 being the big call wall there. And that's for the 21st of Feb. So tons of puts at 5900 across the board. Are they going to defend it? What do you think? Let us know in the comments down below. Is Wall Street going to defend this 5900 level and hold the market up? Let's talk Tesla for a moment. We always knew 400 was the level it was probably going to gravitate towards. This is the put floor. You can see it here. And really, I think it's probably over for the current impulse move of Tesla. And that's not to say it won't move 20, 30, 40, 50 bucks, but that huge movement where we got all the way through the election, that's over. And why? Because we saw Wall Street's hand. We know 500 was the huge target of everybody with options, and we got to like 489 and then sold straight off. Nvidia, we'll look at that more in a moment. Nvidia still holding around that 135. 140 is the big break zone. We get above 140, that's going to be a big deal. Let's move over to yields. Yields still up. Need to see these drop back down to see significant positivity in the markets. At the moment, it kind of looks like a semi-high for longer. What about the bonds market? Well, just remember, this is a problem. We've had two of these rallies, and generally we see this drop when the low has been put in. Have a look at this. We have here the 6th of August. We have here the 11th of September. They were the last worrying signs for the market. It's been ages since we've seen any worry. There's no doubt there's something going on in the bonds. So we will continue to follow this. We'll put it in our weekend video, and obviously we'll see how it's playing out. Home builders, certainly a concern. That is not a concern for a shorter or medium-term trader. This is going to be a longer-term person that's looking to invest for a few years. We'll continue to watch that. Dollar index, obviously bouncing back up. If you had to ask, the trend is up. This is moving towards 110.70 in terms of the overall general trend, and there is no reason to believe it's not at this stage. So the trend is bullish on the dollar. There's no doubt about it. And while I don't think it's the greatest trade in the world, it's just continued to hold up. It went into consolidation, and it's broken and holding up. So unless there's some weird reversal at the end of this week, it's generally looking pretty good. Gold, therefore, is in holding pattern. We still think 3,000 by 2025 in terms of in 2025. But yeah, we're going to need 26.65 to really activate that. You can see here the head and shoulders on silver. We're going to need to break through 31.15 to see that go positive. Large transactions down here nonetheless. The current price action is still towards mostly the shorters though. Well, overall oil, you can see here, well, better trading. This looks pretty decent. Probably some people will have this as a target, 72 a barrel. If it does break 72, I think it's going towards 76. So still, oil looks decently positive, and of course, energy stocks have had those large transactions. Let's jump on over to a few other trades. So I just popped in here PLTR before we go to Tesla. And the reason I'm doing that is just to show you that, again, kind of over here, I said, you know what, I think this is done for now. It's holding the exact same zone. There's nothing wrong with you know, again, when you take profit, you've got to think of taking 2/3 of the move. And in this case, I think PLTR is in a stabilization point. It's either going to go down or sideways. It's not up from the general statistical point of view. So it's great stock, but that's what we're thinking for the next 1 to 3 months. It's gone kind of almost a month there. And Tesla is the same thing. So really what Tesla showed us is probably a blow off top. So this is a fairly significant ramp, obviously huge percentages. 400, might find some buyers here and then hover around for a little bit, maybe even decline down to this area. I said, are we going here? Because that would probably be the better area. Go through your Tesla history. You'll see it to be true. Whenever Tesla goes on big rallies, it always has dumping periods after that tend to be fairly significant. So I'm not sure if 400 is the base yet for it. Semiconductors, at least the medium-term base. Semiconductors still holding through the middle of nowhere. So we're still at around that kind of break-even point. AMD obviously dropping down. Big trade right in here. So we're basically at the big trade level. And then will we now see it go back above 132? We know Wall Street's done something here. If we take a look at Nvidia, which I've got here, A lot of people are calling this head and shoulders. Obviously, we know where the squeeze level is, and we need to break through 140 to get that started. So 140 plus close, daily close would be a big deal. At the moment, since we started to go more bullish on NVIDIA, it's actually been holding really well. So again, it shows Wall Street is holding NVIDIA up more so than any of the other stocks, really. Barber, big trade, obviously coming through. Doesn't look great on the charts in terms of anything in particular new that we can see. But again, large transaction, and we're seeing good defense from HSI. It's actually been a bit more technical than even some of the other markets. So HSI at the moment still holding that kind of bullishness coming into the end of our year and also the end of Chinese New Year, which I believe will be the end of January. US 2K still holding the buy zone area, low term structure, still kind of looking more towards a defended area. It's actually been holding a bit better than some of the other major indices. So again, not too bad on the US 2K. It's at that really good level it needs to hold. What do we go? NASDAQ. NASDAQ's lower highs and lower lows. We're looking for a 21,300 plus breakout. If that happens, you're getting some bullish action. So at this point, position bases will be liking it. We do want some positive stats to start coming through those soon. US 30 holding around that defended level. So again, we want to see this defended level. It's not a good market index. It's been bad for a couple of years to give you good reads. But again, the Dow is down. It's down 6% on the month or in a bit of trade there. So not very good. Ethereum holding the level as we saw. We saw some large, big whales kind of coming through this level. Some of those whales have had a track record of about 85% recently with positive action in their swing. And I can tell you they've started to buy, well, they've started to place buys. Literally, we know they're buys. So they've started to place buys. We then need to see price reaffirm that, which is going to be a 35.60 plus. If that happens, good news. Let's now move over to Bitcoin. Bitcoin head and shoulders pattern. Is that a question mark? We don't know. 88 to 92, it needs to hold. I still think Bitcoin's initial impulse move, this is basically in a holding pattern for now. It's got to be that alts start to see action. It's usually the times everything kind of lines in pretty well, and Bitcoin often underperforms the alts at that period. So look, we've already seen it a little bit. Bitcoin is a great coin. I think it's the best in the market, but it does do this. And are we heading into it? Let us know, comments down below. Guys, that brings us to the end of the video. And also, I want to say a happy new year to each and every one of you. Remember to follow us in X and also check us out on LinkedIn. I posted a really good thing that I think 99% of investors and traders don't do. So I basically posted some really great key points for 2025, how you can get better at trading and investing, and some things to do and don't do. If you want to check that out, check me out on LinkedIn. I will be posting a lot on psychology, which is something we haven't done so much on this channel, but I think it's a great format for doing it on LinkedIn. So follow us there into 2025. I'll be posting every couple of days over on that one. I think it'll help you quite a lot. Remember to follow us on LinkedIn and X, and then of course also check out anything else we do on the internet. Thanks so much for watching, everybody. You have a fantastic start to the new year, and we'll see you in the next video very, very soon. Bye for now.